Morning, Steve Frady in Chicago with the morning grain comment. Well, we've got the aftermath of the USDA report yesterday with corn and wheat prices are basically unchanged. We've got soybean prices a little bit higher. Outside markets, we've got commodities higher, led by crude oil, and I think we're putting a little premium in there because of some unrest in Iraq. As far as the other fundamentals in the corn, beans, and wheat, first of all, in the beans, USDA showed next year adequate supply in the United States and record world stocks, and that offered some resistance to the bean market yesterday. I think everybody's still trying to figure out our old crop supply. You've got many analysts who have a lower carryout than the USDA, so now we have to kind of wait for the June 30th USDA report to see what they estimate June 1 stocks. Cash, though, continues to be weaker than a year ago, suggesting that the 2013 soybean crop may be understated, and that could suggest that soybean prices are a little bit too high versus current levels. Over in the corn, a lot of bears are popping up in the corn market. I think that we're looking at a 2-week weather forecast that's favorable for crops. Crops are off to a good start. People are looking at maybe a yield bigger than 165, and that could add to the carryout. The other thing is China. Whether or not they take our DDGs or not. And new crop, if they don't, that could back up DDGs in the United States. It could hurt corn demand. It could also hurt soybean meal demand. So there's a lot of people thinking that corn prices could go lower than where they are today if Mother Nature cooperates. And it's interesting in that last night, every 6 hours we get a new weather map. And last night the weather map showed a ridge of high pressure just for a couple of days around June 21 and 22nd in the Midwest, and flattening out. This morning, the 6Z map has that ridge staying until June 28th. It's not a real big ridge, but it would dry things out during that week time frame. So historically, the 6Z map has been a little bit more volatile and uncertain than the 0Z, so we'll have to see what the maps say tomorrow. But anyway, that ridge is there in the 6Z maps, and it could support the market a little bit. The wheat, USDA dropped world wheat trade. They raised world wheat stocks, and unless there's some kind of weather problem, wheat prices could probably drift lower from current levels. So we're expecting mixed trade today. We'll look at the export sales, and we'll start watching weather and await that June 30th report. As always, these are my thoughts, not those of ADM and ADM Investor Services. Have a safe and profitable trading day.